Hi, this is Brian Resney. Question of the day is really about asset allocation and really what is developed by a lot of the Wall Street firms and banks. And this question really comes around, why investors really don't make a lot when they use stock asset allocation from these Wall Street firms and banks. The big reason is you're spread everywhere. One of the beliefs that I have, just from looking at a lot of portfolios that come from the banks and Wall Street firms that then hire my firm, is they over-diversify. They own almost every asset category. Instead of owning assets that are appropriate for the current environment, they own a lot of different other assets that basically counteract the ups and downs of maybe the stock market. The problem with that is, while natural volatility is healthy, having little volatility or no volatility because you're hedged on both sides, meaning the portfolio can't go up much when the market goes up, and it can still go down when the market goes down, maybe not as great. But the problem you, the investor, faces if you're doing this asset allocation pie and you're over-diversified, good assets are being brought down by bad assets. So as an example, we've had a number of people we've talked to this year alone in 2017 who are working with Wall Street firms. Their big concern was, Brian, I'm a growth investor with that firm, yet I only made 2.5 or 3.5% last year net of fee, and the market was up around 10%. And I explained to these people the reason is they own all these different assets and it drags down the portfolio returns. Yes, you may have slightly less volatility in pullbacks year by year, but the problem is you never make much money when things are good. You'll still lose some money when things are bad. So again, you don't make money when it's good. You lose money when it's bad. That's asset allocation. I firmly believe a lot of these Wall Street firms and banks are more concerned about volatility themselves versus really making money on your account. I think investors have not been educated properly, and I think a lot of what Wall Street pushes on you, the investor, is something that simply is not going to work in your favor over the long term. All investors are long-term investors. You're not going to spend all your money day one. So remember, as long as you're trying to make a return on your money and grow your income, accept some volatility. If you don't, you're going to be stuck in Wall Street asset allocation, which I believe is a failed strategy and misleads investors down the wrong road. If you're looking for real money management without the conflicts of Wall Street and you're looking for a real trusted firm who works always for you, call us today for a consultation. We do deal with portfolios $500,000 and larger. Call my firm for a consultation. We'd love to do business with you. Have a safe and profitable day.